Today, the US markets look calm on the surface, but something underneath quietly shifted. Most people woke up thinking this is just another normal trading day in January. Headlines feel light, and price movement looks controlled, which creates a false sense of comfort. Calm markets often hide the most important signals from those who only watch excitement. This is the phase where smart money does not speak loudly or act emotionally. Instead, institutions observe how price behaves when attention fades from the screen. Silence in markets is not empty. It carries information for those who know where to look. Retail traders usually wait for excitement before they start paying attention. By the time excitement arrives, positioning is already complete. What changed today was not dramatic, but it was meaningful. Liquidity behavior shifted slightly without drawing headlines. Small reactions revealed how buyers are responding under low pressure. Low pressure environments expose true intent better than volatile days. On high volatility days, fear and noise distort behavior. Quiet days remove emotional interference from decision-making. Today, price held levels without needing strong volume support. Holding behavior during silence often signals preparation. Preparation phases rarely look impressive to the public. They feel boring and uneventful to most observers. Boredom is where impatience begins to grow. Impatience leads traders to assume opportunity has passed. That assumption is usually incorrect. Smart money prefers entering when markets feel dull. Dull markets reduce competition and slippage. Reduced slippage improves execution quality. Execution quality matters more than prediction accuracy. Today, execution conditions quietly improved. This improvement was visible in how pullbacks were treated. Pullbacks were absorbed rather than rejected aggressively. Absorption signals willingness to hold, not urgency to exit. Urgency is absent during preparation phases. Absence of urgency is not weakness, it is discipline. Discipline separates institutional behavior from emotional trading. Emotional trading needs constant stimulation. Professional trading values clarity and structure. Structure is built through time, not speed. Time allows uncertainty to be absorbed gradually. Gradual absorption reduces downside risk perception. Lower perceived risk encourages calm positioning. Calm positioning does not create headlines. That is why most people miss it. Missing it leads to late entries later. Late entries carry higher emotional pressure. Pressure reduces decision quality. This is why understanding quiet shifts matters early. Today was one of those quiet shifts, and most people have not noticed it yet. The shift today was subtle, but it created a different tone across the market. Tone matters more than headlines during quiet sessions like this. When tone changes, behavior follows, even if prices move slowly. Today, buyers showed patience instead of urgency during small dips. Patience reveals confidence that is not driven by emotion. Emotion usually shows through chasing and fast reactions. Those reactions were mostly absent today. Absence of reaction is itself a reaction worth noticing. It suggests participants are comfortable with current positioning. Comfort allows time to do its work quietly. Time is the one element retail traders underestimate most. Retail expects markets to move quickly to feel validated. Professional money allows days to pass without demand for reward. That difference in expectation creates opportunity gaps. Today, those gaps began to form quietly. Volume did not spike, yet structure held anyway. Holding without volume often signals controlled participation. Controlled participation points toward preparation, not exit. Exits usually show impatience and sharp movement. Sharp movement was missing today. Missing sharp movement during uncertainty is meaningful. It tells us selling pressure is limited right now. Limited selling pressure changes risk calculations. Risk calculations guide how institutions allocate capital. Allocation decisions are rarely made during chaos. They are made during calm observation periods. Today fit that environment perfectly. Another detail was how levels were respected intraday. Respect for levels shows agreement among participants. Agreement reduces volatility naturally. Reduced volatility is not weakness. It is balance before expansion. Expansion rarely comes from disorder. It comes from alignment. Alignment builds quietly across sessions. Today added another layer of alignment. This does not mean a move starts immediately. It means conditions are improving. Improving conditions attract planning capital. Planning capital behaves differently from speculative money. Speculative money reacts fast and exits fast. Planning capital enters slowly and stays longer. Signs of planning capital were visible today, not through price, but through response. Response quality always reveals intent. Today, response quality improved subtly. Subtle improvements compound over time. Compounding creates momentum without noise. Noise attracts attention, but weakens structure. Structure is what matters now. This phase rewards observation, not action. Those who recognize it stay ahead quietly. Those who ignore it will notice later. What matters now is how this calm behavior connects across multiple sessions. One quiet day alone does not change the story, but repeated, calm behavior begins to form a pattern. Patterns are what institutional money responds to. Today, continued a pattern that started forming earlier this week. The pattern shows markets accepting current conditions without stress. Stress usually appears through aggressive selling or sharp reactions. Those reactions remain limited for now. Limited reactions tell us fear is not dominant. When fear is not dominant, patience becomes possible. Patience allows larger players to observe without pressure. Pressure forces mistakes and exposes intent too early. Right now, intent is being protected carefully. Protection of intent suggests positioning is still incomplete. Incomplete positioning often precedes continuation. Continuation requires confidence in structure. Structure is reinforced when pullbacks fail to gain momentum. Today, pullbacks struggle to extend lower. That struggle indicates underlying demand. Underlying demand does not need headlines. It only needs time. Time is quietly being provided by the market. This environment favors those who wait rather than chase. Chasing creates poor entry locations. Poor locations increase emotional stress. Stress reduces discipline quickly. Discipline is the main advantage during quiet phases. Those who maintain it gain flexibility later. Flexibility allows response when conditions change. Conditions are not extreme yet. Extreme conditions are easier to identify. Moderate conditions require deeper observation. Today demanded deeper observation rather than reaction. Observation revealed improving balance between buyers and sellers. Balance is not neutral, it is constructive. Constructive balance allows expansion when pressure appears. Pressure can come from data news or positioning shifts. Those triggers do not announce themselves early. They appear suddenly after preparation is complete. Preparation is still ongoing. Ongoing preparation explains the lack of excitement. Excitement comes later when positioning is already done. By then, risk is higher for late participants. This is why recognizing the preparation phase matters. It keeps expectations realistic. It reduces the urge to force trades. Forced trades usually fail. Natural trades emerge when alignment completes. Alignment is forming slowly. Today was another quiet confirmation of that process. Most people will only notice when it becomes obvious. By then, the opportunity will feel crowded. What usually happens next is a subtle shift in attention rather than price. Markets begin rewarding patience instead of speed. This phase feels boring to most viewers watching charts every minute, but boredom is often where structure quietly strengthens. Today, the boredom carried an important message. Prices moved, but reaction stayed controlled. Control matters more than direction at this stage. When control exists, large money can operate safely. Safety allows gradual expansion without exposure. Expansion without exposure is the ideal environment for institutions. Retail often misreads this calm as lack of opportunity. In reality, it is opportunity forming beneath the surface. Surface noise remains low by design. Low noise protects positioning from attention. Attention invites competition too early. Early competition raises costs. Rising costs reduce efficiency. Efficiency is everything for professional capital. That efficiency explains the slow pace today. Slow pace does not mean weak conviction. It usually means conviction is being protected. Protected conviction tends to last longer. Lasting conviction supports multi-session movement. Multi-session movement is where real trends develop. Today added another layer to that possibility. Volume stayed balanced rather than aggressive. Balanced volume suggests agreement rather than conflict. Agreement allows markets to rest without breaking. Resting markets absorb supply quietly. Absorption prepares the next phase. The next phase never announces its arrival. It arrives through behavior change. Behavior change starts internally before price reacts. Internally, we saw fewer failed attempts today. Fewer failures indicate improving coordination. Coordination reflects shared expectations. Shared expectations stabilize price action. Stability attracts cautious participants. Cautious participants tend to stay longer. Longer participation supports sustainability. Sustainability is what most people miss early. They search for excitement instead of durability. Durability builds slowly and silently. Today was another step in that process. Nothing dramatic happened, and that is the point. The absence of drama itself was the signal. As the session progressed, something important became clearer. Markets were not searching for direction anymore. They were confirming balance. Balance is often the final test before movement. This test rarely excites retail traders, but it matters deeply to professionals. Professionals look for consistency, not surprises. Consistency reduces unknown risk. Reduced risk invites commitment. Commitment never arrives loudly. It arrives quietly through repetition. Today showed that repetition clearly. Price respected levels multiple times. Respect signals acceptance. Acceptance stabilizes expectations. Stable expectations calm decision-making. Calm decisions prevent forced errors. Forced errors usually mark weak markets. Today, weakness did not dominate. Instead, reactions stayed measured. Measured reactions indicate preparation. Preparation suggests timing awareness. Timing awareness separates professionals from amateurs. Amateurs react. Professionals anticipate. Anticipation requires patience. Patience was visible today. Even during minor pullbacks, selling remained controlled. Control implies confidence. Confidence grows when risk feels manageable. Manageable risk attracts incremental capital. Incremental capital avoids disruption. Avoiding disruption preserves structure. Structure is the foundation of continuation. Without structure, trends fail early. Today, structure was defended repeatedly. That defense did not require volume spikes. It relied on positioning discipline. Discipline is harder to fake than excitement. Excitement can be manufactured. Discipline must be earned. Earned discipline reflects experience. Experience guides market behavior quietly. Quiet behavior frustrates impatient viewers. Impatience leads to poor timing. Poor timing feeds disappointment. Disappointment pushes people away too early. That cycle repeats every year. Today showed signs of breaking that cycle. Markets invited observation instead of reaction. Observation creates clarity. Clarity improves alignment. Alignment strengthens conviction. Conviction held steady today that steadiness matters more than price distance. Distance can come later. First comes agreement. Agreement was visible beneath the surface. This is why today mattered, not because of movement, but because of control. As the day moved closer to the close, another layer of clarity appeared. Late session behavior often reveals true intent. Short-term traders usually exit before the bell. Institutions prefer confirmation near the close. Today, the close carried calm confidence. Price did not rush into the finish. It settled with intention. Intentional closes matter more than intraday spikes. Spikes attract emotion. Closes reflect decisions. Decisions made late are rarely impulsive. They are measured and planned. Planning shows belief in positioning. Belief does not require noise. Noise usually hides uncertainty. Today, uncertainty stayed muted. Muted uncertainty strengthens structure. Structure allows markets to breathe. Breathing markets absorb pressure better. Pressure absorption prevents sharp reversals. Reversals damage trust. Trust is essential for continuation. Today, trust was protected carefully. Protecting trust takes restraint. Restraint is visible through small details. Bid support appeared consistently. Support did not chase price. It waited for price. Waiting indicates preparedness. Prepared participants act without urgency. Urgency often leads to mistakes. Mistakes invite volatility. Volatility was controlled today. Controlled volatility encourages participation. Participation spreads confidence quietly. Quiet confidence sustains trends. Sustainable trends begin calmly. They rarely announce themselves early. Early announcements invite premature chasing. Chasing weakens structure. Structure remained intact today. That integrity matters heading forward. Integrity signals professionalism. Professional behavior dominates meaningful moves. Meaningful moves take time. Time was respected today. Respect for time builds reliability. Reliability attracts patient capital. Patient capital defines real direction. This is why the close mattered today. Not because it was dramatic, but because it was disciplined. As we step back and look at the full picture, one truth becomes clear. Markets rarely reward urgency. They reward alignment. What we witnessed today was not excitement. It was preparation. Preparation always comes before expansion. This is how sustainable moves are built. Quiet positioning replaces loud speculation. Discipline replaces prediction. And patience replaces fear. When markets behave calmly, they are not weak. They are selective. Selective markets choose direction carefully. Careful direction lasts longer. This is where most people get distracted. They wait for headlines. They wait for confirmation from noise. But professionals watch behavior. Behavior always speaks first. And what we saw today was behavior staying composed. Composed behavior signals confidence. Confidence does not rush. It allows opportunity to come to it. That is how capital protects itself. And that is how momentum survives pullbacks. Going forward, the key is not prediction. The key is observation. Observe how price reacts, not what people say. Observe how markets respond to pressure, not hype. Observe consistency, not excitement. This mindset changes everything. It removes emotional decisions. It replaces them with structure. And structure is what carries trends forward. At MarketPulseUSA by AB, this is exactly what we focus on. Clear behavior, calm signals, real market intent. If you want daily clarity without noise, stay connected. Subscribe so you don't miss what matters next. The next video will build on this foundation. We'll track how this structure evolves and where patience begins to pay. This is where informed confidence replaces guesswork, and this is where smart positioning begins.